Good afternoon, traders. This is Tony D from easyMarkets. We've had a very quiet overnight session here. The big awaited tax plan has been delayed once again. So the negativity and the potential negativity or positivity from getting the details of the tax plan, we're going to have to wait now until possibly over the weekend to get the actual details. So there is negotiations going on right now in the Republicans to see what sort of concessions they're going to make. If it is too aggressive, then the market will obviously go down stock-wise. US dollar will go down. If it's too positive, the US dollar is priced in a fair bit of positivity, so you may not see a dramatic reaction. So the risks are skewed definitely towards US dollar negative and stocks negative. The delay of the implementation of the tax cuts would be one of the ways it's negative. Also, if there's a pause of a year before you even start to phase it in, the phase in could be the speed of the phasing could be another way which the market will be disappointed. Also, the reactions from key political leaders in the US, their support or lack of support will be very critical to see if it can actually pass in coming days and weeks. So the drama has continued. Trump is in China. So far, there hasn't been too many negative headlines or even headlines at all regarding that. He's supposed to be speaking with President Xi at the shortly, and trade will be one of the main conditions, main subjects there. Also, North Korea will be another main subject. We'll see if there's anything dramatic coming from there. Probably, given his last meetings with Japan and South Korea, hasn't been too much for the market to chew on. What we're seeing today in the Asian session, you did see a sharp little bounce for the Kiwi dollar as the lower Kiwi dollar post, well, since the last RBNZ meeting, has led to the market being caught a little short. And if we look at the chart, you can see what we're looking at here. This is daily, starting to turn higher. The sell-off since the last RBNZ meeting has been quite sharp. So the actual forecast for the bank is for a tick higher in inflation given the lower Kiwi dollar. When your country has a lower currency, and especially if you're an island currency, like Britain or like New Zealand, and you import a lot of your goods, then there is a very strong correlation between a lower currency and higher inflation, as the importing of goods costs more. So you saw that come through with pretty heavy inflation in the UK after Brexit. You should start to see the impacts of the recent 7 to 8% fall in the Kiwi as well. And so that's what the central bank was focused on, and that's what the market took as slightly hawkish. And you see the immediate reaction of around about nothing crazy, but it still got to fresh highs in the cycle recovery. So the market is well positioned here to perhaps test 70 cents in the coming days. The Aussie dollar failed at 77 again, pulled back a little bit higher from 77.50, 76.50, sorry, to get. I mean, it's well supported on dips here. Positivity is coming through in the base metals and also oil remaining quite strong. So the outlook is a little bit better now for the market. Now if we're looking at the top side, what we want to be focused on is if we can get past that previous high, that's 77. If we can get past that, then the market might start to be looking like the base is in, and then looking for topside resistance and range trading. And the Aussie loves to range trade. If you're looking at the weekly, you can see what I'm talking about here. If it gets into a nice little trading pattern, then it will stick there for a few months. If it's going to follow its previous few years of trading style. I mean, that's its personality at the moment. It's not really strong or weak. It's just really reacting to that US dollar strength and weakness at the moment. All right. Also, in terms of dollar yen, the negativity overnight, as soon as it was announced that the bill was not going to be released, started to ratchet higher. Today we got back to 114 as you're looking at some very strong gains in the Nikkei. Worth bringing them up to have a look at here. The Nikkei has broken to fresh 20-year highs. Then broke 23,000 this morning, got all the way up to 23,400. Then fell slightly after lunch down to 23,200. So it's very volatile, but the volatility isn't coming across onto the dollar yen as much as it should, or much as it has in the past. So if you're looking at the size of the rally in the Nikkei, if there was the old relationship with dollar yen would be up a big figure. So the lack of follow through means it's decoupled a little bit. That's something to note. You can't really make your trading decisions on dollar yen based upon the equity charts at the moment. There's a little bit too much. It's been left behind in some regards. All right, the other big move in the market last night was Bitcoin. The announcement that the fork had been delayed has sent the Bitcoin surging to all-time highs, 7,890. Then it reversed sharply in an hour, all the way down to 7.1. So huge moves there. Profit taking came in as the market stalled up top, but in terms of the positivity towards Bitcoin, it's still there, and the delaying of the fork doesn't hurt it at all. It's just more how high can it go before having corrections, and that's what you saw last night. So if it got up to 7,890 again, it wouldn't be as dramatic, the resistance. Obviously there was some capitulation there on the way down, and buyers all trying to get out at the same time is the story. All right, guys. Look, if you do want to talk to a dealer like myself about the market, any particular pairs that you're looking at, lots of small moves happening here, but broadly the bigger picture, you want to see what your pair is doing. Please give us a call on the numbers below, or if you're not a member of the ATG, the Active Traders Group here in easyMarkets, then please click on the link below, open an account, and someone will contact you to help you with the registration process.